So let us now look at the other items on the income statement. We have the gain from sale of land. This is not a operating activity, so this is not considered for calculating the cash flow from operations using direct method. Next we have the provisions for taxes. So obviously this is an operating item and provisions for taxes is around 40,000. Let us now look at the balance sheet and see if there are items related to taxes. You can look at, there are two items here. One is the taxes payable and there is deferred taxes, both of them on the liability side. So let's write down the formula first for better understanding. Cash expense because of taxes, this would be your taxes on the income statement plus your balance sheet. You have two line items to reconcile. One is the taxes payable and the second is the deferred taxes. So these are the two items that needs to be analyzed from the point of view of cash inflows or outflows. So let's go back and look at those. So we have here is the taxes is to an extent of 40,000. Now let us look at the impact of taxes payable. This is classified as current liability and this current liability increases from 8,000 to 10,000. So there's an increase of 2,000 in current liability. This implies that cash has come into the system because liability has increased. What about your deferred taxes? Your deferred taxes has increased from 30,000 to 40,000. So your liability has increased from 30 to 40. This would mean 10,000. This would essentially mean that it has a positive cash impact, that is cash goes up by 10,000. So net because of the balance sheet items we have an effect of 12,000 which is cash inflows. So let's go back to our formulas and write down the associated numbers. So the taxes paid is 40,000 with a negative sign because this is an expense. Taxes payable was 2,000 here and the cash impact due to deferred taxes was another 10,000. So what we get in terms of cash expenses related to taxes is minus 28,000. Now if you go back to your income statement and see if there are any items which are missed. So broadly we have covered all the expenses in the income statement. So we are kind of ready to calculate the cash flow from operations using direct method by just adding all these numbers. So this would be cash taxes, interest, wages and COGS as well as cash receipts. So let us do that and see what is the total number. So this would be 198,000 minus this is 68,000 minus another 17,000 minus 0 minus 28,000. So this comes out to be around 85,000 I guess. Yeah. So this should be 85,000.